You've probably heard about Japanese trading principles before. Zen patience, samurai discipline. That whole thing about cutting losses like you're pruning a bonsai tree. Here's what nobody mentions. 92% of Western traders who try to apply Japanese trading philosophy completely miss the point. They read about detachment, then sit there white-knuckling through drawdowns, pretending they're not terrified. They study discipline, then beat themselves up for every emotion that surfaces. I've watched this happen so many times, it's almost predictable now. There's one principle that actually changes how you trade, not because it's exotic or mystical, but because it cuts straight to the thing that's destroying your account right now. And when I tell you what it is, you're going to think it's too simple. You might even feel a little insulted, but stay with me. Because by the end of this, you'll understand why the traders making consistent money aren't the ones trying to eliminate emotion or achieve perfect discipline. They're doing something else entirely. Let me tell you about Marcus first, because his story illustrates exactly what goes wrong. Software engineer, smart guy, spends 6 months studying Japanese candlestick patterns, the irony. Read every book, Steve Neeson, the whole library. He'd look at his charts and see hammers, dojis, engulfing patterns like he was reading ancient text. 2 months into live trading, he was down $11,000. Here's what happened. Marcus would spot a perfect bullish engulfing pattern. He'd enter. The trade would move 5 points in his favor, and he'd feel that little surge, you know the one. Then it would retrace 3 points, and something would shift in his chest. Not quite fear yet, just awareness. He'd watch it retrace another 2 points. Now he's only up 2 points, and his brain is doing that thing where it's already calculating how this winner might become a loser. He'd close it, take the small win, feel responsible, even smart about it. Then he'd watch the trade run another 40 points without him. But when trades went against him, different story. He'd hold them, not because of discipline, not because of his rules, because closing a loser felt like admitting he was wrong about the pattern. And Marcus was rarely wrong about patterns, in his engineering job anyway. So he'd wait. The market would give him little moments of hope, a small bounce, maybe it'll recover. He'd hold through those bounces, through more drops, through that sick feeling in his stomach that he was doing exactly what he promised himself he'd never do. He'd finally close when the pain became unbearable. I'm going to tell you what Marcus was actually struggling with. It's not pattern recognition, it's not discipline, it's something else. And understanding this is the difference between bleeding out slowly and actually building an edge. But first, you need to see what it looks like when someone gets this right. Hiroshi, yes, actually Japanese, lived in Osaka, traded futures, approached the exact same market completely differently. He used simple moving averages, nothing fancy. When price crossed above his average, he bought. When it crossed below, he sold. His system was almost embarrassingly basic compared to Marcus's elaborate pattern recognition. But here's what Hiroshi understood that Marcus didn't. Every morning before the market opened, Hiroshi would write the same sentence in his journal. Today's trades are already forgotten. Not positive affirmations, not "I will be disciplined," just that one line. Today's trades are already forgotten. He'd enter a trade, it would move in his favor. He'd feel that same surge Marcus felt. But then, and this is where it gets interesting, he'd acknowledge the feeling, out loud sometimes. I want to close this early. Just saying it. Not trying to judge it, not trying to crush it with discipline, just naming it. Then he'd ask himself one question. Is this what the system says to do? If the answer was no, he'd sit on his hands. Literally, he'd put his hands under his thighs and wait 60 seconds. Most of the time, the urge would pass. Sometimes it wouldn't. But the question wasn't about eliminating the urge, it was about not letting the urge make the decision. When trades went against him, same thing. He'd feel the hope, the maybe it'll come back feeling. He'd name it.
I want to hold this. Then, is this what the system says to do? The system said close it, so he'd close it. 17 months later, Hiroshi had turned $35,000 into $112,000. Marcus was still trying to master patterns. Now here's the principle. It's called Mu in Zen Buddhism, but that's not what I'm talking about. See, told you this wouldn't be mystical. The trading principle that actually works is this. You're not trying to eliminate your emotions. You're trying to eliminate your emotions' ability to make your trading decisions. Read that again, because most traders get this backwards. They think discipline means not feeling fear, not feeling greed, not feeling that urge to close early or hold too long. So they fight their emotions. They try to suppress them. They feel guilty when anxiety surfaces, like they're failing at trading psychology. But fighting your emotions takes mental energy, and that energy is the same energy you need to execute your edge. Every time you're battling yourself, trying to force yourself not to feel something, you're depleting the exact resource you need to just click the damn button when your system says click. The Japanese principle isn't about elimination, it's about separation. Think about it like this. When you're hungry, you don't stop being hungry just because you're in a meeting. The hunger is there, you feel it. But you don't suddenly stand up and walk out of the meeting to get a sandwich. You acknowledge the hunger and you continue with what you're doing. The hunger doesn't make the decision. You do. That's what profitable trading looks like. You feel the fear when you're entering a position that meets your rules but feels scary. Honestly, the good trades almost always feel scary. You acknowledge the fear. I'm scared this will fail. Then you ask, does this meet my criteria? If yes, you enter anyway. The fear didn't make the decision. Your system did. You feel the greed when you're up money and you want to add to the position outside your rules. You acknowledge it. I want to add here. Then you ask, is this part of my plan? If no, you don't add. The greed didn't make the decision. Your plan did. I've noticed something about the traders who survive past 18 months. They're not emotionless. Some of them are anxious people. Some of them are naturally impulsive. But they've learned this separation. They've stopped trying to be someone they're not, and they've started creating systems that work with who they are. Let me show you what this looks like practically, because theory is useless if you can't apply it tomorrow. Sarah, former casino dealer, which is funny because she already understood probability better than most, used to have a massive problem with revenge trading. She'd take a loss and something would ignite. Not even anger, really, more like this burning need to get it back. She knew it was destructive. She'd written, "No revenge trading" on a sticky note above her monitor. She'd set alarms. She'd made rules. She'd break them anyway. Here's what changed. Sarah stopped trying to not feel the revenge urge. Instead, she created what she called her cooling-off protocol. The moment she took a loss, before she could even think about the next trade, she had to write down two things. What the loss cost her, in dollars, written out, $240, and what the revenge trade would risk, another $300, maybe more if I'm being honest with myself. Then she'd stand up, physically leave her desk, make tea. Not because she was trying to calm down, though that helped, but because the rule was no trades until the tea is finished. That's it. Simple. Stupid simple, actually.
But here's why it worked. She wasn't fighting the emotion. She was just putting time between the emotion and the action. The revenge urge didn't go away while she made tea. It was still there. But by the time she sat back down, the urge wasn't making the decision anymore. She was. Some days she'd finish the tea and still take a trade. But now it wasn't revenge. It was a trade that met her criteria. She could tell the difference. You can always tell the difference, even when you pretend you can't. 4 months of this protocol, her revenge trading dropped by 83%. Not eliminated, reduced, because she stopped fighting herself and started working with herself. You need to understand something about human psychology that most trading educators won't tell you. Your emotions exist for reasons. Fear keeps you alive.
Greed ensured your ancestors took risks that led to reward. These emotions are hardwired, and they're not going away, ever. When you try to suppress them, when you try to master your emotions like some kind of stoic warrior, you're essentially trying to override millions of years of evolution with 60 days of reading trading psychology books. It doesn't work. The emotions always win eventually. But you don't need them to go away. You just need them to not be in the driver's seat. There's a trader I know. He'd kill me if I used his real name, so let's call him David, who's been profitable for 9 years. He still gets scared. He told me he feels mild nausea before almost every trade that meets his highest probability setups. Every time. 9 years. You know what he does? He's learned that the nausea is actually a signal. It means the trade is probably good because all his good setups feel uncomfortable, while the comfortable trades are usually mediocre. So when he feels sick, he knows he's about to do something right. He's not trying to eliminate the nausea. He's reframed it. The emotion is still there, doing its thing, but it's information now, not instruction. This is the separation I'm talking about. Most traders think the goal is to reach some Zen state where nothing bothers them, where they can lose 5 trades in a row and feel nothing, where they can sit through drawdowns with perfect equanimity. But I've met those traders. You know what happens to them? They stop caring about their results. They become so detached that they don't feel the urgency to improve their edge. They take losses with a shrug, never bothering to review what went wrong because it's just probability, man. You need to care. You need to feel it. The pain of losses should bother you, just not during trading hours. The fear before entries should register, just not prevent execution. The greed should be present, just not driving position sizing. The Japanese concept of ma might actually be useful here. Okay, maybe a little mysticism. Ma is the space between things, the pause, the gap. In music, it's the silence between notes. In architecture, it's the emptiness that gives meaning to structure. In trading, ma is the space between feeling and action. You feel the emotion. There's a space, maybe 60 seconds, maybe 5 minutes, maybe the time it takes to make tea. Then there's the action, based on your rules, not your emotion. That space is everything. When Marcus figured this out, it took him 14 months and a lot more losses, he started doing something odd. He'd feel the urge to close a winner early, and he'd literally narrate it to himself. I'm feeling the urge to close this trade early. The urge is present. I'm not going to act on it right now. I'm going to wait 2 minutes and see if the urge is the right action based on my rules. 2 minutes later, the urge was still there, but the panic behind it had faded. He could think clearly enough to check his rules. Most times, the rules said hold, so he'd hold, urge and all. He described it like having a toddler in the back seat of the car. The toddler, his emotions, would scream about wanting ice cream. He'd acknowledge it. Yes, you want ice cream, but he wouldn't turn the car around. The toddler could scream all it wanted. The toddler wasn't driving. Here's what this looks like as a practical system you can use starting tomorrow. Before you trade, write down your rules and make it 4 rules, not 3, because 3 is too clean and you'll forget one anyway. These are your decision-making criteria: entry, exit, position size, whatever. Make them specific enough that you could hand them to a stranger and they'd know what to do. Then add one more rule, the 60-second pause. Every time you want to do something that's not written in your 4 rules, you pause for 60 seconds. Set a timer. Sit on your hands if you need to. The urge might feel unbearable. That's fine. You're not trying to make it go away. You're just not letting it press the button. After 60 seconds, ask yourself, is this what my system says to do? If yes, do it. If no, don't. That's the entire system. Feel everything. Pause. Separate the feeling from the action. Then act based on your rules, not your reaction. You'll mess this up a lot. There will be days when the urge bypasses the pause entirely and you find yourself in a position you didn't plan. That's not failure, that's data.
Write down what happened, what triggered it, what the urge felt like. You're not judging yourself, you're just collecting information about how your particular brain tries to hijack your trading. Over time, you'll notice patterns. Maybe you always override your rules after 2 losses in a row. Maybe you always add to winners on Fridays. Maybe you always close positions early when you're up exactly $200 because that number makes you feel safe. These patterns are useful, not because you'll eliminate them, you won't, but because you'll see them coming. And when you see them coming, you can create specific protocols for those specific triggers. Remember Sarah and her tea? She didn't create a protocol for all emotions, just revenge trading. That's all she needed. You don't need a perfect system that handles every possible emotional state. You just need protocols for your particular failure modes. The beautiful thing about this approach is that it works with who you are, not against who you are. If you're naturally anxious, you don't need to become confident. You just need a system that works even when you're anxious. If you're naturally impulsive, you don't need to become patient. You just need friction between impulse and action, hence the 60-second pause. If you're naturally optimistic, you don't need to become pessimistic. You just need rules that protect you from your optimism. The traders who make it aren't the ones who change their personality. They're the ones who build systems that account for their personality. So, here's what you're going to do tonight, not tomorrow, tonight. You're going to write down the one emotion that derails your trading most often. Just one. Maybe it's fear that keeps you from entering good trades. Maybe it's greed that makes you overtrade. Maybe it's hope that keeps you in losing positions. Pick the big one. Then you're going to create one simple protocol for that emotion. Not a complex system, just one tiny friction point between the emotion and the action it usually triggers. Like Sarah's tea, like Marcus's 2-minute wait, like Hiroshi's hands under his thighs. Start there. Don't try to master all your emotions at once. Just create separation in one area. Get good at that. Then add another. That's the Japanese principle that actually changes everything. Not elimination, separation. Not fighting yourself, working with yourself. Not becoming a different person, becoming a person who trades according to their rules instead of their reactions. And if you found yourself recognizing Marcus or Sarah or David in this, probably all of them at different times, honestly, drop a comment about which emotion hijacks your trading most often. I read every single one, and sometimes your comment becomes the next script because we're all struggling with the same fundamental things, just in slightly different flavors. The market doesn't care how disciplined you are. It doesn't care how zen you become. It only cares whether you can execute your edge consistently. And you can't do that while fighting yourself.